SST College of Arts and Commerce. This is SST Edupedia. I am Assistant Professor Deepika Vaiecha. In this video, today we will be learning about different types of audit. This particular topic is in TYBCBI Semester 5 Auditing subject. So let's see what are the different types of audit. The types of audit are divided in different categories. On the basis of authority, if we divide the audit, we can say there are two different types, which is first statutory audit and the another is non-statutory audit. Statutory audit refers to an audit which is compulsory as per the statute. Statute refers to act or a law. So an audit which is compulsory required to be conducted by any company, so that is terms to be a statutory audit. On the other hand, if we can say a non-statutory audit is an audit which is not compulsory by any governed act, but however, if a person or an individual wish to conduct the audit of its business or a firm or an NGO, then they can conduct the audit, but that can be categorized under the non-statutory audit. So further, by elaborating the meaning of statutory audit, which is a act audit which is compulsory as per the Companies Act 2013, or if it is a banking company, so an audit which is governed under the Banking Regulation Act 1949, or there may be an insurance company, so for that insurance we have IRDA Act 1999. So accordingly we have different acts. On the basis of those acts, an audit which is compulsory to be conducted, that is statutory audit. One more point I wish to add, all the business concerns whose annual turnover is more than 40 lakhs, for those particular companies it is required to conduct the audit by an expert who is chartered accountant and who is a member of Institute of Chartered Accountants of India. Let's continue with the features of statutory audit. As discussed already, it's a compulsory audit and it should be conducted by an expert who is chartered accountant, and also all the legal provisions required under this particular audit are governed by a particular law, a particular statute which is applicable for that particular company. Say for example, if it is a private limited company, so for that particular company the law applicable will be Companies Act 2013, and as per the provisions of that law, an auditor is required to conduct an statutory audit. Now continuing further to the non-statutory audit, as already discussed, non-statutory audit is an audit which is not compulsory by the law, but if a particular organization or a sole trader, small scale business organizations wish to conduct the audit for their business concern, they want to check the accuracy of their financial statements, so they can conduct the non-statutory audit by, and it may be by a chartered accountant, or if they wish to conduct the audit from any other person who is having the expertise knowledge about the accountancy, about the financial statements, they can also conduct the audit for a that will be categorized under the non-statutory audit. Further, we do have partnership firms, we do have trust, we do have NGOs. All these, the audit which is conducted for partnership firm and also for non-profit making organizations, that will categorize under the non-statutory audit. Further continuing with the distinguish between the company audit of the company and the audit of firm. Now, as I already discussed, audit of a particular company is a statutory audit, and audit of a partnership firm will be categorized under the non-statutory audit. So, we'll see what are the distinguished points between the two. First point is type. So as already discussed, the statutory audit, the audit of a company is a statutory one, and that of the audit of the firm is the non-statutory. Law. The provisions of a particular specific law is required, which is Companies Act 2013 in case of audit of a company, and if it is an audit of a firm, then we need a Indian Partnership Act is required. Scope. If we see the scope of audit of a company, which will be comparatively broad than that of the audit of the firm. Appointment of an auditor. The auditor of a company is appointed by the shareholders of the company in the annual general meeting. However, auditor of the firm will be appointed by the partners of the partnership firm. Prescribed formats of account. In audit of the company, the prescribed format is mentioned in the Companies Act 2013, and in that particular format only a company is required to prepare their financial statements. However, there is no specific format for audit of a partnership firm. Then audit report. Audit report is required to be prepared in a prescribed format, and should be submitted to the shareholders of the company, as the shareholders of the companies has appointed the auditor. However, in case of the partnership firm, there is no prescribed format for audit report, but that will be submitted to the partners of the particular firm. Now, continuing further to the next type of audit, which is internal audit. Now, as a name suggests, internal audit refers to examination of accounting records, transactions by the management of the particular company to see whether the financial records, financial statements are properly prepared or not. Before calling the external auditor, or else you can say a statutory auditor, management may appoint internal auditor. It may be a management expert, it may be an accounting staff who is having the knowledge of the financial statements. He or she can check the financial records, and he may check and also find out whether there are any kind of errors or frauds in the financial statements, so that can be rectified before calling the external auditor or before presenting their annual records to the external auditor. So, for checking the internal control system and the arithmetical accuracy, management may appoint the internal auditor. So it is not compulsory for companies to have the internal auditor, but management, for their concern, for their satisfaction, like whether the company is whether the company's accounts are properly prepared or not, they can appoint the internal auditor. And it is not necessary that internal auditor should be a CA, that is chartered accountant. That person may be having a knowledge of accountancy, a T graduate person, but he is having the expertise knowledge of the accountancy, who is capable enough to check the books of accounts. Now, scope of internal auditor. Internal auditor will evaluate the management system, like whether what is the management system. The management system is followed in the company. He will check the detailed records, like whether all the books of accounts are properly prepared and verified by the another person or not. Then he will also evaluate the processes, like if a company is a manufacturing concern, then what is the procedure is adopted by the company to make the product, like from raw material till finished goods. What is the process which is opted by the company, and whether that the proper system is followed or not. Then maintaining the compliances. Now, what is the meaning of compliance? Compliance refers to rules and regulations. Whatever the rules and regulations which are prescribed by the management, which are given by the management, which are followed or not, that should be checked by the internal auditor. reduces the risk of fraud. The internal auditor and the internal audit reduces the risk of fraud because before the accounting staff and also the employees will be well informed that there is the internal audit as well, so they will not deliberately do any kind of a frauds because they have that idea in mind that someone is there who is going to check whatever the work is done by me, so the chances of frauds will get reduced. Financial statements. Now, the opinion of the external auditor totally depends upon the financial statements of the company. So, internal auditor will check the financial statements of the company whether the properly all the provisions in relation to the accounting disclosure, in relation to the principles of accounting are properly followed or not. And lastly, it will also check the efficiency level of the company, like whether employees, whoever is appointed, they are working efficiently to meet the target, which is to meet the goals which are set by the management. Now further, if we can see what is the distinction between the internal audit and statutory audit. Internal audit is an act which is conducted or which is done by the management of the company, but statutory audit is an audit which is compulsory as per the law, as per the prescribed statute. And first of all, appointment of the auditor, internal auditor is appointed by the management. However, the statutory auditor is appointed by the shareholders of the company in the annual general meeting, as already discussed. Qualification further, we can say like statutory auditor must be a chartered accountant, but for internal auditor, there is no compulsion for chartered accountancy. Further, if we can say a compulsion, statutory audit is something which is compulsory as per the statute, but it is not in the case of internal audit. Status: auditor of the company, internal auditor may be an employee of the company, but external auditor is an independent professional expert who is not having any kind of a relation with any of the authorities of the company. Then objectives. The internal main objective of the internal audit is to check the accuracy, arithmetical accuracy, and also to check the internal control system of the company. However, for external audit, for statutory audit, the main objective is to give the opinion about the true and fair view of the books of accounts. Now, duration. Internal audit may be conducted as in when management requires. There is no compulsory fixed duration for the internal audit. However, in case of the external audit, that is statutory audit, there is a duration which is a period of 1 year, which is the one financial year. Report. Again, internal auditor is required to report to the management as he is appointed by the management experts only, and the statutory auditor is required to report to the shareholders, and he will give his opinion about the whether his books of accounts are properly prepared or not. So in this video we have seen what exactly the types of audit are there on the basis of authority, and also we have seen the distinction between the internal audit and external audit, and also audit of the company and audit of the firm. Thank you so much. Thank you.